Okay, good morning everyone. Today we're going to be doing some analysis on silver US dollar or XAGUSD. Starting from the 1 week time frame. I will start by identifying our zones, our weekly zones. Our zones are essentially points where price found resistance or support and resistance multiple times, which is exemplified here where price found resistance twice. Let's delete that and make this a weekly zone. Another zone here. Another zone here. As a rule, higher highs and higher lows are essential. Higher highs and higher lows on price are usually act as zones. Or you can also say that they usually form as zones. So wherever I have a point, because this is the weekly time frame, and it's very clearly an impulsive move to here, a correctional move here, followed by another impulsive move afterwards. Meaning that there's a relevant zone here and a relevant zone here. All these zones are quite far away from percent price action, which makes you wonder if there's a point in joining them all. But like I've said in some of my previous videos, if there's no point, then practice is enough of a reason. Because the more you practice drawing your zones, the better and more easily you'll be able to identify your weekly zones and your monthly zones. So we can see, we're now done with the daily time frame, we can see a bit of a trend line here. This is our daily trend line. You can also see another zone here. But this one is a daily zone this time. So this is our daily zone. Let's see if we can draw a trend line. Okay, we can actually draw another trend line right about like this. And this trend line is even much closer to the current trend movement. So daily trend line. We have another zone here because you can see that price bounce off its place twice to form a W before price moved upwards. Right. Let's switch to the line chart. You can see it right here. Price formed the W. Price formed the W pattern and then moved upward, making that point a relevant zone. Just have a drawing of a big candlestick wicks. This is another. Okay, so this is another daily zone. There should be a zone here as well. Well, let's check that on the forward time frame. So the typical is to identify our trend of origin. As you can see, the price has basically been on an upward trend for as long as I can see. See. So I'll just identify here as my trend origin because this is the point that the price may be, would I call it a correctional? Yeah, let's just call it something like a correctional move where a slight halt in the direction of the trend. So we'll just identify this as our trend origin so that we don't start going so far back and trying to identify so much. Okay, so now I have an impulsive move here, a correctional move here, impulsive move here, correctional here, impulsive here, correctional here, impulsive, correctional, impulsive, correctional, that we'll do is to identify our swing highs and our swing lows. So firstly, we'll start by identifying our swing highs, or we'll also call them our higher lows. Yes, we'll call them our higher lows. You can see that price is not actually acting the way you might see it move in a textbook. But by being able to use market structure, you can better fix price movements, into that textbook-like template, which helps make it much easier for you to understand price movements. Okay, so now we're identifying our swing highs or our higher highs. This is our first higher high. We have one here. We have one here. We have one here. And this price may still be on an impulsive move. So now let's go down to let's delete this. Now let's go down to the 4 hour time frame and see what we can find. Okay, that's interesting. There's a W pattern here. And when it comes to W patterns are usually a chance pattern that indicates that it's likely about to be some buying pressure. But still. So what are we looking for? We're looking for two things. We're looking for any pattern that appears before price, when price is about to switch from a correctional phase and a daily time frame to an impulsive move. Let's do it like this. Let's draw this. Okay, so what are we looking for? We're looking for any pattern that appear when price is about to switch from a correctional phase to an impulsive phase, which can be characterized by these red boxes. When price is about to switch from a correctional phase to an impulsive phase, we look here, this first red box, this second red box, and this third red box, to see if there are any chart patterns that price prints out. And if we can identify a chart pattern that price prints out before making this move, then we'll be confident of, being able to catch that move. Then we'll also do the same for here, for the sake of being able to tell when an impulsive move has reached its end. So if there's a pattern that appears in this blue box, a pattern that appears in this blue box, and another pattern that appears in this blue box, and I know that whenever that pattern appears, it means that this impulsive move is about to end. Okay, so let's see if we can identify any of such patterns. Hold on. Okay, so let's see if we can identify any of such patterns. First of all, I can already see a W here, but it's not a very well formed W because the second leg is a little too high. We have a much clearer W here, coming from like this, another W pattern. I can spot it better. Okay, let's focus on the. Okay, so I can also see something like a W pattern here, and then here I can see both a big W pattern like this here, and I can also see a smaller. I can also see a smaller W here, and funny enough, I can also see a W pattern like this. So it all depends on how you. So I can see all these W patterns that I will have W patterns appearing within W patterns. So at this point, I should have been confident in taking a buy from this point. Similarly, we have a W pattern here, and not just that. If I switch to the line chart, you can see that there's a W pattern here as well. And this W pattern not only contains a bullish engulfing. This W pattern not only contains a bullish engulfing candlestick, which is inside of the blue box, it also contains reversal candlestick pattern. Okay, no, let me do it tomorrow. Not only does this W contain a bullish engulfing candlestick, which is inside of the blue box, it also contains a reversal candlestick pattern. If you are familiar with your candlestick chart patterns, you can see this big red candlestick, the doji candlestick, followed by a green candlestick, which is a reversal candle, which is a trend reversal candlestick pattern. To find these two patterns, form a W, and this W is a chart pattern within a chart pattern. This gives me a very, very, very high confidence being able to take a trade here, or hide it behind my daily zone. Hide it behind my daily zone. And then, but because this is the highest point that price has reached, I'm not sure how far I can take it. So let's measure. This is 6.8. So let's measure 6.8, or let's say 7. Okay, so that's where we'll leave our target. Stop loss is a little bit over wide, so we'll now go down to the H1 time frame to see if there's any chart pattern or market structure, most especially market structure, that I can use to reduce the size of my risk. Right now I don't see any. Okay, technically I can reduce it to about here, since this point is obviously, since this lowest point is obviously the previous higher low, so I can put my risk right below this level. You can see that has actually drastically reduced my risk, but still the risk is quite wide. So maybe we should wait for a correction and move to be followed by another impulsive move. But anyways, that's it for top to bottom analysis on silver. That is AGU, still USD.